Hello, everyone. Good evening. Good evening, good afternoon, and welcome to the webinar. My name is Suman, and I will be your host for today's webinar. And many of you are here already, and let's give another 2 minutes for others to join from the group. Meanwhile, welcome to all the participants who are attending the webinar every Saturday and taking a lot of value, and also to all the people who are new here. So, how many of you are new here? If you are new, just go ahead and type in the chat box new. Good afternoon, Tombile. Right. So, nobody is new here today. Hi, Vijay. Welcome to the webinar. All right. If you all can hear me and see me well, no disturbance, then just type in the chat box. You all can hear me, okay? And you all know the rules now. Participation, right? What's the rule? What's the first rule? Anybody? You can unmute yourself and also answer. Okay. Looks like, is everyone here? I can't see anything in the chat. I can't see anybody unmuting and answering me. Come on. What's happening? Can you all hear me well?
Yeah. Thank you. Yes.
Perfect, perfect. So what's the rule number one, Techno?
Yeah.
Okay, you all have forgotten. Participation, right?
Yes.
Yes. Ask your questions, make notes. One promise is by the end of this webinar, you will be able to learn so much from Mr. Andreas that, you know, you will be able to start implementing immediately after the webinar. Okay? Amazing.
Thank you.
So thank you for joining. And Joseph, yes, participation. And rule number two is keep smiling, right? Awesome. Any new participants here today? That's very good. I like that. Someone is listening and someone is, practicing. Joseph, congratulations for that. Awesome. So, without further ado, let's call upon Mr. Andreas. And are you all ready to learn today? Yes? Mr.
Yes,
Andreas,
we're
thank
ready.
you so
Yes.
much.
Hello,
Thank you so
Suman.
Thank you so much for your time, Mr. Andreas. And for all of you who are new,
Yes.
I would love to introduce Mr. Andreas. He's the highest rank holder of the technical analysis certification, and he has done 30 years of amazing work globally, teaching thousands of students. And I'm always happy to introduce and to welcome Mr. Andreas. We can't wait to learn from you.
Thank you,
The
Suman.
stage
Hello,
is yours.
everyone. Hello, everyone. Let's make sure that all microphones are muted for now. And whoever wants to ask a question, of course, they can unmute themselves and they can answer any question or just ask any question. It's no problem. If I know
Right.
the answer, I will reply. So, guys, let me share my screen. Just a second. Let's see if we can manage to do it from the first time today.
Yes.
We have it right?
Yes. Perfect.
Excellent. Good. So, guys, the ultimate trading formula. This is a professional trading strategy that I have developed throughout the years. It's based on very complex theories and concepts, but don't worry, I will make it so easy for you to learn and understand. The goal is to have a professional strategy, a system, a plan, a method, so you will stop losing money, those who have been trading for a while, and you can type in the chat whether you have been trading, whether you have been profitable, whether you have been losing money, please give us some feedback so we can all learn from each other. So I will give you a professional strategy to stop losing. And for those who are just starting out, it's going to be a very good shortcut. It took me a few years, to be honest, to come up with this strategy. I studied many books, many seminars, very expensive seminars, up to $30,000. To be honest, they promised me the world and they gave me nothing. And then I found what I was looking for, and everything changed. People, traders, institutional traders started knocking my door, calling me, and then Forex brokers called me and they said, can you train our people all over the world? And this is what I did for the last years. So here we are, guys, and I'm going to share this knowledge with you. So the ultimate trading formula, what do you need to trade the financial markets? What do you need to trade the financial markets? You can answer in the chat, but I will go ahead now and let you know that you need a trading system. You need rules, when to buy, when to sell, when to say, okay, I made a mistake, let me get out with a small loss. And also you need rules where you are going to book your profits. All this, you will get them today, right? The next thing that you need is risk management rules. You need to know exactly how big your position is going to be. Let's say you deposited $10,000. Are you going to risk all $10,000? The answer is yes and no. You know, if you are Elon Musk, $10,000 is nothing, right? But for us, perhaps $10,000 is $10,000, and we're not going to risk everything in one trade. So we need risk management rules. If we are losing money, are we going to start praying, hoping that the market will change direction and close our trade break even, or are we going to have a stop loss order so we make sure that we lose a small amount so we can protect the whole account, right? Correct. And then, of course, after I give you all this information, my question to you is, will you be able to follow what I will teach you today? Can I hear you? Can I see your answer, please? Let me hear you, please. What do you think? Will you be able to follow what I'm going to teach you today?
Yeah.
Good. What? Any feedback, guys?
Yes,
No?
yes.
Who said yes? Joseph?
Joseph, yes, sir.
Joseph.
Yes, I said yes.
Yes, we
And
will follow it.
you will follow it. And
Yes, sir.
as I always say, guys,
Vincent.
time will tell whether you will follow it or not. Because in our mind, there is another little guy saying, don't listen to Andreas. Don't listen. He's getting old. Get in the trade faster, ahead of everybody else. These voices will be there. Or that little voice might say, don't listen to Andreas. It doesn't matter that you are losing. Soon the market will reverse and you will make profit, right? Or if you're making profit, that little voice will tell you, hey, don't listen to Andreas. Don't close the trade with that profit. Wait for more profit, and eventually you will lose. So the fight will be you against you eventually if you enter the market. And you will remember me one day that you will be fighting against yourself. What I'm trying to say is discipline is extremely important in this business. And I can give you some clues. I can help you a little bit, but eventually you will have to find the strength to be disciplined. And that depends solely 100% on you guys. Okay? We can go on. So we need a trading system. So how are we going to build our trading system? The first method is based on gut feeling, right? So I have a very long story to give you. It's more than an hour. It happened to me. It's a real story, but unfortunately, we don't have time for that. I'm just going to tell you the juice out of it is you look at this chart and you feel where the market will move next. So if somebody tells you, don't listen to Andreas, follow the gut feeling, run away, right? You need tangible rules, and I will give you those rules. The second method that you can build a strategy, a plan, a method, a system to trade is what is called fundamental analysis. It's based on economics. I'm sure that maybe none of you is an economist, or you heard economics, or maybe you don't know what economics are, or it doesn't really matter. I will give you an example. To trade the markets based on economics, you need to spend a lot of time analyzing each currency separately, each country, a lot of indicators, economic indicators, a lot of knowledge, a lot of time. And then again, you will not be able to analyze and trade many currency pairs or many markets. Today, you will learn how to analyze the markets, guys, listen, at the speed of light. And I'm not saying that, I'm not promising that. The older people, the older students that they come over and over every Saturday here, they know exactly what I'm going to say next. It's a guarantee that in a while, you will be able to analyze the markets at the speed of light. So the third way to analyze the markets is based on technical analysis, and this is my expertise, and this is what I'm going to teach you today. So we are going to use technical analysis. So I will skip the fundamentals and concentrate and focus on the technical analysis. Just three brief principles so you can understand where we are standing. So the first principle of, before we go there, let me just tell you the definition of technical analysis. So the definition of technical analysis is that we analyze the price, or we analyze the price chart. We analyze the price chart for the goal to identify the next trend in its very early beginning. So we look at the chart to find the next trend. This is our goal. Look at the chart to find the next trend. So if we find the beginning of the next trend, then we trade and we go along with it and we make some money, right? Good. So the first principle is market action, and from now on, we can call it price action or price. Market action means something else, includes something else that is out of the context of this webinar. So let's say price discounts everything. What does it mean? What does it mean, price discounts everything? It means that the price chart reflects all the information out there, political, environmental, economic, any information that is out there that happened or is about to happen is shown on the price chart. So our only goal is to learn how to read the price chart, because the price chart reflects all this information. Are you following me, guys? Let me hear you. Are you following what I'm saying? Yes?
Yes, we're following.
And any question?
No
question.
Go ahead.
No question. Any beginner that is lost? No? Okay. So that's the first principle. Price discounts everything. The price chart shows exactly everything that is happening in the world, shows the impact of what is happening in the world. Do you want to know the information, by the way? Question. Do you want to know the information that moves the markets? Let me hear you.
Yes.
Who said yes?
Joseph.
Yusuf. Anybody else?
Yes, yes, yes.
Yes. Okay. The answer is no. The answer is no. You don't want to know the information that moves the markets. You are not a journalist. You are a trader. And as a trader, you don't care about the information. You care about the impact of the information. Is it clear?
Excuse me.
Henry, go ahead.
There's somebody for this microphone. There's a lot of noise.
Hello,
Yeah,
Andres,
guys,
sir.
mute your microphones, please. Mute your microphones. We have questions here. What is going on?
So there is a lot of difference, a lot of disturbance, sir.
Yes. Mute your microphones, please.
Okay, Mr. Andreas, I'm going to mute all now.
Yes.
In a second, can you please unmute yourself?
Yes.
Thank you. Okay, you can unmute yourself.
I will. Okay. All right. We can go on now. Very good.
Yes.
So
perfect.
if you have a question, unmute and then mute again. Okay, guys, so there's no noise. So the second principle is prices moving trends. So if you look at the price chart, you will be able to identify the prevailing trend or the past trend. It doesn't really matter. There are always trends on the price chart. This is very important. And the last principle is that history repeats itself. What does it mean? Simply, it means that mathematicians, technical analysts, statisticians, and many other scientists studied the markets, the price charts for many decades back, and they identified certain price patterns that worked very well in the past. So we expect these patterns to work equally well today and into the future. This is what it is. It doesn't have anything to do with support and resistance, like most of my students say when I ask these questions in our seminars and workshops. It's about patterns that worked very well in the past. And we expect these patterns to work equally well today and tomorrow in the future. Very good. Excellent. This is Joseph. Very good, Joseph. So let's go on. What is trend? This is the $1 million question. What is the trend? Because we all know trend is our friend, and we have to know the definition of the trend so we can identify it and go with it, so we can get profit out of the market, out of the trend. So the simplest definition is the direction of the market, right? The trend, the direction of the market. But if I tell you guys the trend is the direction of the market, then I expect you to go home, turn on your laptop, and be able to identify the trend. I am afraid this definition will not be enough for you to identify the trend. So we have to give you a more detailed definition. It's the direction of successive tops and bottoms. A lot of my students in the beginning talk about highs and lows. Highs and lows. Guys, listen to me carefully, because here we're learning the correct terminology as well, the correct principles, and the correct theories, right? Highs and lows exist only on a candlestick. On a collection of candlesticks, we talk about peaks and troughs, or about tops and bottoms. We don't talk about highs and lows. We talk about tops and bottoms. Is it clear? And I will show you in a while what the top and the bottom. We're not talking about a high and a low. High and low exist only on a single candlestick. I hope this is clear. So markets do not move in a straight line. So if you see like 10 candlesticks going higher and higher and higher, that's not a trend. This is just a spike. Let's call it a spike. And then another note here is that markets move in a zigzag mode, like zigzag, zigzag. You know exactly what a zigzag is, but I will show you just now. So look at that. what is trend? You see, is the direction of successively higher tops and higher bottoms. Guys, this is a high, this is a high, this is a high. You understand what I'm saying? But this is a top. Prices move higher and higher, and then they start to go down, and they form a top. Prices go down, and they start to ascend, so they form a bottom. So it goes like that in a zigzag path, higher tops and higher bottoms. So the first definition of the uptrend is the direction of successively, one after the other, higher tops and higher bottoms. Is it clear? So we can move on. Let me hear you guys. Is it clear? So we can move on.
Very clear,
Yes.
very clear, very clear.
Very
It's
clear.
clear.
Okay, thank you. We're moving on. So here is a downtrend. Similarly, the definition of a downtrend is the direction of successively lower tops and lower bottoms. So this is a beautiful downtrend because we have successively lower tops and lower bottoms. Each top is lower than the previous top, and each bottom is lower than the previous bottom. If you tell me that everything is fine, I will move on.
Very okay.
Very okay.
It's fine.
Excellent. So the next question is how many tops and bottoms we need at a minimum to have an uptrend or a downtrend, right? It's a very reasonable question. So before we answer that, let's talk about the range, right? Equal tops and equal bottoms, right? This is the definition of the range, of the trendless market, of the sideways market, of consolidation, and many other words, terms that define the range. How many of you are trading the range, by the way? Anyone trading the range?
I do sometimes.
Who is this one?
It's Okoro.
Okoro, you have been trading sometimes the range. And what is your experience so far with the range? Honestly?
Sometimes I hit stop loss. Sometimes I also win.
Really? Sometimes you win?
Yes, yes, sir.
Okay. If you win, do what you are doing and make money. If you are losing, stop trading the range. Because the range, until you identify the range is gone. We can talk about that in another webinar, of course, and I will prove, because this is the range, guys, right? This is a range. To have a straight line, let me very briefly, to have a straight line, how many points at least you need? Let me hear you. For a straight line to exist, how many points at least you need? This is mathematics, it's not trading. Nobody? So you need 2 points. So this point and this point for the upper line, and you need at least 2 points for the lower line of the range, at least. When you go to the advanced technical analysis that we offer, you will understand about trend lines, that we have the tentative and the valid trend lines, and the one needs at least 2, and the other one, the valid, needs 2 or more. So you need more than 2. In a nutshell, here it's defined the range. The range starts from here, at this point here. That's what I'm saying. By the minute you identify the range is gone. But if I want to fool you and show off of my so-called knowledge that I don't have, I will tell you guys, if you buy here and then you take your profit here, you will make money. And then you sell here and you take your profit here. This is a scam, right? Because you look at the range in hindsight after it finished, but in the beginning, when you see candlesticks come down, you don't know that this is a range. Are you following me, guys?
Yes.
Are you following?
Yes.
You understand why I call the range a scam? Do you understand the reason behind it?
Yes.
You will have a range here, but the range is already gone, most probably. Yes? Okay, good. This is the topic of another session, of course. We have so many sessions, and there are three directions of the trend: up, down, and sideways. There is no other direction, by the way, only three directions. Let me see if we have any questions. Very good. Yes, two. All right. Excellent. So, up, down, and sideways. Good. By the way, did I mention that at the end of this presentation, I'm going to analyze 11 price charts live here with you? So, stay with me. 11 price charts, guys. We're going to analyze them together. The minimum requirement for the uptrend. Look at that. We need at least 2 higher tops and 2 higher bottoms, and price moving above the second bottom. So the second top. I repeat, at least 2 higher tops, meaning this top is higher than the previous one, and 2 higher bottoms. This bottom is higher than the previous bottom, and the price, do you see this candlestick, moves above the second top. So right here, where this candlestick moved above the second top, then from this point onward, we are officially in an uptrend. And this uptrend will continue to move higher and higher forever. And this is where some of my students in the beginning will disagree with me, right? They say, no, it's not gonna move higher forever. But then I will recall Newton's first law of motion that states a body in motion will move in the same direction forever until something happens on it and changes direction. So I'm employing the same theory in our trading to help you in your discipline. So after we identify an uptrend, we expect this uptrend to go higher and higher. That's why we are going to buy, expecting the uptrend to go higher and higher until something happens, of course, and it will change direction. So once again, we need at least 2 higher tops like this, 2 higher bottoms, and price moving above the second top. Good. For the downtrend, we need at least 2 lower tops, 2 lower bottoms, and price moving below the second bottom. Yes? Is it clear?
Yes.
All right. Let me see. And of course, again, equal tops and equal bottoms, it's a range. This is what the books say, equal tops and equal bottoms. But don't believe the books, guys, because when it comes to many theories, I will prove to you that your books are wrong. And the definition of the range is also wrong, because there's no such a thing as equal tops and equal bottoms. It cannot be precisely equal. And if you look at my design here, it's on purpose that this top is not really equal as this one. And if you look at the bottoms, they are not really equal. They visually, about more or less, they might look equal, but in reality, if you take the pips and the points, they are not equal. And this is one reason that makes the range very risky. Of course, the other reason is that you identify the range in hindsight after it's finished. And that's the biggest problem. So we buy in an uptrend, we sell in a downtrend, and we stay out of the market during a range. Let me see if we have a question. But how to identify the sideways will occur? You will identify it, you will identify the range, you will identify the sideways after the sideways occur, not before, right? And this is the problem, exactly, Vijay. We cannot identify the range in the beginning. We only identify the range at the end. That's the biggest problem. Good. We go on. So look at that. This is what the theory says. After you identify the uptrend, you can buy in an uptrend. So this is the minimum requirement for the uptrend. So the theory says we buy here, right? Because this is the minimum requirement for an uptrend. Mind you that we are not going to follow this theory that was developed in the late 1800s. 1800s. Yes? 1800s, when the traders traded on the daily and the weekly and the monthly time frame on a piece of paper. Yes? So, similarly, in a downtrend, the theory states that we are going to sell after the downtrend is established, right here. But again, we are not going to follow this theory. We're going to follow the definition of technical analysis that states that our goal is to identify the next trend in its very early beginning, right? Let me see if we have any question here. Can someone trade sideways? I always say my students are not allowed to trade sideways. Why? Simply because I don't want you to lose money. Because if you trade sideways, you will lose money, right? Then, does the identification of the trend have anything to do with the time frame? The answer is no. The beauty of technical analysis is that it applies to all financial instruments and all time frames, right? This is the beauty of technical analysis. And you will find out in a while. So let's go on. Yeah, we mentioned that. So look at that, guys. Very fast. What do you see here? Very fast. Let me hear you. What do you see?
A downtrend.
A downtrend. Excellent. We have a question. What causes sideways? Who cares? This is the answer. Who cares what causes the sideways? Who cares what causes the uptrend? Who cares what causes the downtrend? We are not journalists to write articles. Who, why, and when. Our job as traders is to make profit. Is it clear, guys? Is it clear?
Yes, sir.
Sure.
Excellent. So this is a downtrend. And how about this? What is this? Very fast. What is it? You said you understood the definition of the uptrend and the downtrend and the range. And now I ask you a simple question and you cannot reply to me. What is the direction of the market?
Downtrend.
Thank you. Thank you. It's downtrend. Finished. How about now? What is the direction of the market?
Still downtrend.
Still downtrend. Still downtrend. But here, look at it, guys. Stay with me. Here, this bottom was supposed to be lower than the previous. In a downtrend, we have lower tops and lower bottoms. Correct?
Yes.
But in this bottom is not lower. It means that the market is talking to us. The market is telling me, Andreas, be careful. Something might happen very soon. Might, not for sure. Something might happen very soon. What might happen? This might happen. Reversal. Because instead of going downwards, here, this bottom failed to go lower than the previous one as it was supposed to go, and then prices move above the last top here. And this is the end of the downtrend and the beginning of a new trend in the opposite direction. And what are we going to do here, guys? Before anybody else gets in the market, we're going to buy. Because this is the definition of technical analysis, to identify the very early beginning of the next trend, right? We're going to buy. This reversal is not Andreas reversal. It has a name. It's called failure swing, because this bottom failed to go lower. Failure swing. This bottom failed to go lower, and the prices, instead of going lower and lower, they swing direction and they move above the second top. Failure, swing. Clear? Clear. It was mentioned by Wells Wilder, great technical analyst, is the person who developed relative strength index, parabolic stop and reverse, and ADX, and many other systems and indicators and oscillators. So, very good. And what is this? Very fast, at the speed of light. What do you see here, guys? Let's go. What do you see? Uptrend. Why? Because there are successively higher tops and higher bottoms. As simple as that. Now, what do you see here? Still an uptrend, right? But the market is talking to us. It's saying, be careful, guys. This top was supposed to be higher, but something might happen, right? Something might happen. And what might happen? This price might fall below the last bottom. And if that happens, then we have a reversal, which is called again failure swing. And we're going to sell exactly right below the bottom, the last bottom. Is it clear? Or do you have any questions? Let me hear you. I think we have some questions here in the chat. Reversal. Yes. Yes, reversal. Wait. Very good, Vijay. Mute mic. When to exit. Okay. We can go on.
Andreas.
Yes.
Suppose the market after failure swing only a week that goes below that failure swing. Should you still buy? Or should we have full body?
Say that again.
I'm asking.
Yeah.
After failure swing.
Yes. Here.
The candle only breaks with a wick, but not a full body. Should you still make a sell or a buy?
Look. It's a very good question, guys. It's a very good question. To answer this question, let me show you this. Let me see if I can use this one. Okay, look. Let's say I will use this one. Yeah. Let's say the candlestick looks like that. Look. You get the idea what I mean?
Yes.
Is that long? If you wait for the close, then you will sell here. It's too late. I am already out with a lot of profit. So you will sell a little bit below this bottom. Here. Clear?
With a full body or with a wick?
It doesn't matter. When the price is moving, you don't wait for the candlestick to close.
Okay.
It's clear?
Thank you.
Exactly. We have a question. Can the market go up after showing failure swing immediately? So let me see, guys, how I'm going to do this thing here. Here, this one. So, very good. So the question is this. After the market shows the failure swing here. Is it possible to do like that? What do you think, guys? Yes or no? Let me hear you. What do you think? Is it possible after the failure swing that this happens? The market goes up. Yes or no?
Yes.
Yes, it's possible.
Who said yes? Very good. Anything is possible, guys. Anything is possible. Nothing is 100%. If anybody tells you, guys, don't listen to Andreas, I have this expert advisor, I have this bot that is 100% correct, I have this indicator that is 100% correct, run away, right away, run away. It's a fraud, it's a scam. There's no such a thing. Nothing is 100% in this industry or any other industry. Is it clear?
Sure.
Yes.
Any questions? Any questions? Anybody who disagrees with me?
Agree.
We agree.
100%.
If you have a small account, how do you survive this massive pullback from this type of this market? I know stop loss could be a solution, but is there a different solution? That's a good one. You reminded me of a student of mine from Indonesia, but I don't have time to share that information with you. So, guys, listen to that. The question is this. If I have a small account and after a failure swing, this happens, right? How am I going to survive? I know that I can use a stop loss, but is there any other way? The other way, in a very jokingly way, is that you can start praying or use a stop loss or use a stop loss. Your choice is yours, okay? And I'm sure it happened many times to you that when you are in trouble and you don't follow the rules of the strategy that I'm teaching you, and your little voice starts telling you to do otherwise, that you will remember all religions that you know, all prayers, and that you will employ all this to help you. And sometimes it will help you, and it takes only once to lose all your account. So you better follow what I'm telling you and use a stop loss when it's needed. Is it clear, guys? Yes? I'm trying to be a little bit, describe this in a very jokingly way so you can remember these pictures, okay? It's very important for your discipline. Did you have a setup for small account to start with? Yes, we have this. The setup, the price setup is always the same. If we are talking about the position size, then we cover that in the risk management book that we have and in the technical analysis bootcamp, which is it's a professional course. It's not for everyone. You have to be able to afford it. But if you are serious and committed in trading, then my humble opinion is sooner or later you have to follow that course, because otherwise you will lose a lot of money. And eventually you will come back and say, I want the bootcamp. So the answer is yes, but we don't cover it in this course. So we can go on. Let me get rid of this. Interesting. We have to go here. Maybe here, maybe here. Here, yeah. So what do you see here? Beautiful downtrend, a bottom that fails, and then prices swing direction. What are we going to do here? We're going to buy, yes? And this is a failure swing. We're going to buy here because we expect prices to move higher and higher. Good. So here, guys, in a very short and brief way, is that you are not allowed to identify a failure swing in a range. Because when we meet again, you will tell me, hey, Andreas, you know, I followed your strategy. Listen, I followed your strategy. I understand. You're trying to blame me now, right? I know exactly what you're going to say. I followed your strategy and I lost. Really? Then show me your trade, and you will show me a failure swing in a range. It doesn't work like that. A failure swing, it's a reversal. It reverses the prior trend. If there is no prior trend, there's no reversal, period. Is it clear? Now, where's my student? Hopewell, are you here?
Yes, sir, it's clear.
Where's Hopewell? Okoro is Hopewell?
Right here.
Where are you? Okay. Very good. Excellent. We go on. We go on. Guys, give me some feedback. Nobody's talking? What happened? I lost you.
Carry on.
I lost you. You're here?
Today, everybody is very quiet.
I don't know why.
We're here, sir.
We are here for you, sir. We're here. We're here, sir. We're
Okay.
here.
Very good. So give me some feedback when I ask you guys so I know you're following me. All right.
Yes, sir.
Excellent. Riding the trend and stop loss. Look at that. It's a very unpleasant situation, guys. It hurts a lot, especially for the beginners. The way I describe it is like a punch in the face. When you place a stop loss and the market hits your stop loss, it's like a punch in the face. And then after the punch, a punch here in the heart, and then a punch in the stomach. One after the other, very hard. How does it feel? Extremely painful. But let me tell you, get used to it because it will happen. Losses are part of this business. And losses prevent your... What did I do now? I don't see my screen, Suman. I don't know what happened. My screen is here. Okay.
We can see your screen, Mr.
Yeah,
Andre.
okay, very good. Losses are part of this business. Get used to it. And the most important thing is that the small losses, the pre-calculated losses, the predefined losses are good because they protect your capital. You lose a small amount instead of the whole account. And this is part of risk management. Okay? We have questions? Yes, we're listening. Excellent, excellent. Good. Now, and of course, it's very difficult for the stop loss because it's like we have to admit that we shouldn't have taken this trade. And human beings, it's like admitting that we are wrong, right? It's very difficult for a person to say, guys, I am wrong. Not a lot of people say that. Not a lot of people have the strength to say that. And that's why a lot of people lose money in this business. We have a lot of Nigerians, I believe, here, and South Africans and Kenyans and many other Africans here, nevertheless. But I was in Lagos on the island, right? You know the island in Lagos? There's a big conference there. I don't remember the name, many years ago. And we had like 500 participants. And after 6 hours of workshop, I said, guys, we have to leave. It's late. Do you have any questions? And Samuel, I remember his name, very nice guy. Samuel said, Professor, I disagree with you. I said, why? He says, you constantly preach that we should use a stop loss. Let me tell you, Professor, he says, the minute I stopped using the stop loss, I stopped losing money. I said, good for you. Then do not use stop loss. And then let me ask you, why are you here then? Why did you come here since you are not losing money? He says, I lost 10 accounts already. You get my point?
Yeah.
You will lose your account guaranteed if you do not use stop loss. You might get lucky a couple of times, maybe 3, but it takes only once to wipe out your whole account. And I'm sure some of you here experienced that already. You don't have to say who you are, but I know for sure that you experienced that unfortunate event, right? Okay. So use a stop loss. The next question is, what happened now here? I cannot move my screen, guys. Why?
Mr. Andres, you can stop sharing and can you reshare?
Yeah. Oh, very good, Suman. Excellent. Congratulations.
You're not able to share?
I'm not sharing now.
No.
Okay. Oh, and I got so excited that I
That's
got it right. What is going on here?
You're sharing now.
Now,
Perfect.
can you see it?
Perfect.
Yes.
Yes, sir.
All right. So we have a minimum loss, a predefined loss. Before you enter the trade, before you buy or sell, you know exactly where you are going to place your stop loss and how much potentially you might lose. Is it clear? And this is the correct business. In any business, you know exactly what is the potential profit and what is the potential loss. As simple as that. This is a business. We're not gambling. We're not hoping that something might happen out correct. We have a plan. So what do you see here? Very fast, guys, at the speed of light, what do you see?
Downtrend.
Downtrend. Only one sees a downtrend. What about the rest of you?
Downtrend.
Downtrend. Only two?
Uptrend.
Very good. We have a question here. Prof, can you explain to me what do we mean by break even? Break even means I enter the trade, it goes up or down, but eventually I get out with no profit, no loss. No profit, no loss. Break even. Clear? Now, it's a downtrend, you said. Why? Because there are consecutive lower tops and lower bottoms, more than two, right? And we enjoy the downtrend. And then what happens, guys? What happens? What happens? Let me hear you. What do you see?
Uptrend.
Like that. What is it?
Change of direction.
Uptrend.
Not
Change of
uptrend.
character.
It's a
Change of
reversal. It's a
Reversal.
reversal. It's a failure swing. It's the
Failure
very
swing.
early beginning of the uptrend. It's not an uptrend yet, right?
Oh.
Yeah. So, what are you going to do here? Right here. What are you going to do?
Right.
Bye.
Buy. And
Yes.
what are you going to place here?
Stop loss.
Stop loss.
We're going to place a stop loss. Why?
To stop the limit of the risk.
Because nothing is 100%. We buy here because we believe, based on this
Anyone has
pattern
it.
that worked very well in the past, that it will go higher, but it's not 100%. So sometimes this will happen. And we want to be prepared. And we're going to lose this amount here, the difference between this top and this bottom. This is it. So if it goes higher, I will show you where to take your profit. And if it goes in the opposite direction, I show you exactly where you get out with a small loss. Questions? No questions?
I
Yes.
want to ask Andreas,
Yes.
He's Henry.
Yes, Henry.
Now that the market has hit my stop, after now that failure swing, and then the market
Yes.
turns again to opposite direction to one sell.
Yeah.
Should I, after breaking that, whether that's my stop loss, is it abnormal to sell? Would it be abnormal?
You mean to sell here?
Yeah, after failure swing, the
Yes,
market
goes up.
goes up, then turns back again to one sell.
Yeah, here. Here.
Yeah.
Not here.
There,
You mean to here?
After hitting stop loss, yeah.
No, you're not going to sell because this is most probably it's a range.
Okay.
We buy and sell after a trend, and then after a failure swing. So you need a trend, failure swing to
Hello.
buy or sell. Nothing else.
Hello.
Nothing else. Yes.
Suppose after that, after hitting my stop loss, the
Yes.
market to continue on downside for a sell.
Yeah.
Hello, sir.
Should I still wait until I get another failure swing to run the same direction, or what am I supposed to do?
You
Suppose
have to wait. You have to wait for the trend to form and to identify a failure swing. Nothing else. You
So now,
always look for a trend and the reversal. Nothing else.
where will I get that failure swing? Yet the market was still on the downside. Only that.
If after the failure swing goes down, you have to wait for the market to form a downtrend and then a reversal to go up. Nothing else.
So,
You cannot do anything else.
so
Clear?
I'm not clear.
Why? When do you sell? What do you want to do? To buy or sell now? You want to sell?
No, I'm asking.
Yeah, I
There was
understand.
no
I
for a
understand.
buy.
Yeah.
There was still there was no.
I don't hear you very clearly. Can you go closer to the microphone, Henry?
I'm saying,
Yes.
according to this chart,
Yes.
the market is on sale.
It's not on
Yes?
sell here. It's not on sell here. The
Sir,
market
I would
is
like
a
to
buy.
say,
It's a buy
There was
and
a
then
previous-
stop loss. And then stop loss. There's no sell
Yes.
here.
Then
Yeah.
after stop loss, the market
Yes.
hits my stop loss.
Yes, here.
And the market goes one sell and rallies down. Where exactly will I get the entry point now that the market was on a buy, then change to a sell? Because now
Here.
this buy
Here.
has a
Here. Look. If you see this, then you
Yes.
can buy here. There's
Yeah.
nothing else to do. Nothing else. Nothing else. If the market goes up and do like that, you can sell here. You need an uptrend and then a failure swing to sell. If there is no uptrend and a failure swing, you are not allowed to sell. Is it clear, Henry?
50%.
sir, hello.
I'm talking about continuation of that sell
Hello.
because
Hello.
Wait. Let me finish with Henry, guys. Let me finish with Henry. Henry, we have to clarify that with Henry first, and some of you might have the same question. So we are here. We are here, right?
yes, the heat of the stop loss.
Where are the
Heat
stop
of
loss?
where
So
the market hits the stop
the
loss.
question is, where am I supposed to sell? You are not allowed to sell here. You need an
Now-
uptrend to sell.
Mhm.
Hello, sir.
Henry, is it clear what I'm saying?
Come again.
Yes, sir. Sir, I would like to say
To
something.
sell, just a second, to sell, you need an uptrend. You need to see this. If you don't see this here, you are
Yeah.
not allowed to sell. Here you can sell. You need an uptrend and then a failure swing. Here, there is no uptrend to sell. Henry,
Yeah.
this is the explanation. You have it confused for some reason. I don't know.
Mhm.
Vijay, go ahead.
Yeah, what would I like to say? See, you have drawn a downtrend, and this is the last peak here. Before the blue line you had drawn for the reversal, below this line, below this peak, if the trend moves down, so we should go for again buy. Sorry, again sell. And if it goes
Here,
beyond
here,
this
here.
first peak, yeah.
Yes.
Wait.
No, here, last peak of the downtrend.
This is the last
Last-
here. This one.
No, down of this.
This
Down
is-
of this.
This one or this
Last
one.
peak. Last
This
yeah,
one?
correct. This one.
This one.
Yeah.
What do you want to do here?
If the goes below, if I will wait here. If it goes there, I will either exit or I will wait. If the breakdown from the last peak here again, so I will go again sell for the
Why?
time higher
Based
time
on
frame
what
it is
theory?
better.
Based on what theory, Vijay? Based on what theory?
Based on here is for the downtrend, sir. So it
No,
is just a spike
no,
little bit
no.
up.
No,
If the
no.
news
Listen,
release.
listen. If I have a candlestick that closes like that, are you going to sell here?
No, if
Here.
the break down this
It
line.
breaks below here. It breaks
Yeah,
below.
correct.
Here. Yeah.
Below, yeah. Below, yeah.
Yeah. And your stop loss will be here?
Yeah, correct. Cost will
And
be, yeah, above here, sir.
no, you cannot do that. In our strategy, you sell after an uptrend here, and you buy after a downtrend. Nothing else. There's nothing else.
Okay,
This
sir.
is not clear direction. It smells like a sideways market. And I said that sideways is very, very risky. Okay? I'm showing here high probability setups. Let me see if I have any questions, by the way.
Sir, I would like to say something.
Of course.
Yeah, for the sideways, if a big downtrend or big uptrend occurs and we have taken an advantage of that, so sideways to have to identify. So I have an experience that I am putting a moving average. When the moving average goes horizontal between the candles, so then we have to stop the trading. We should not trade.
Listen, Vijay, look, in a range, you are not allowed to use a moving average. Principle. This is the principle. It's not my idea. This is technical analysis. Okay. In a range, you do not use moving averages, and you do not use any oscillator that is derived from moving averages. For example, MACD. You are not allowed to use an MACD in your range because MACD is based on two moving averages, okay. Right? Mm. And this is what we teach, of course, in the technical analysis bootcamps and many other things that a lot of students are not clear about it. That's why I insist that if you want to become a trader, guys, if you are starting out or if you are a trader already, you have to go through the technical analysis bootcamp so you can learn the correct principles and demystify a lot of false information that is out there. Yes, go ahead. Next.
Sir,
yes.
I will send you a screenshot using the moving average for the sideways.
No, it's not needed. It's not needed here, okay. Because I will show you here. Look, this is a sideways. Okay. Do you agree with me that this is a sideways?
Yes, correct.
Okay. And do you agree that this is a moving average in correct, a sideways?
Correct. Yeah, yes? Correct. Yeah.
And what do you want to do? You want to buy here and sell here? No.
I will stop, sir. I will stop to trade it. I will not trade here.
Exactly. This is what I'm saying. So this is the beginning of a range for me. This is what I'm trying to say.
Correct.
Yeah. You agree with me now?
Yes, sir. Thank you.
Exactly. Thank you. Excellent. Any other question, guys?
Yes, sir. I have a question.
Who is this?
It's Okoro.
Okoro. Okay. Go ahead, Okoro.
The question is based on this, the diagram. First, I have a sell. Now, I have a buy. Now, this buy is now a failure swing.
This buy here?
Yes, sir.
Yeah.
Yes, sir.
Yes.
Now, let's assume that there is no failure swing. That another swing high and low was also produced.
Just a second. You mean this? This?
Yes. Then another one also.
This is not a failure swing. This is called non-failure swing. Yes. Go ahead.
Okay.
You want to buy here?
Okay. Then let's say now the buy continue.
Yeah.
And give us two swing high and swing low.
Yeah. Okay.
Now I want to ask, my question is, where will I start counting my swing high? Is it from this first change of character or from the second one that I'm going to count from?
Here. Do you see?
Okay, so if I did not see two swing high and low, I'm not permitted to buy.
No. I didn't say that. You need 2 higher tops and 2 higher bottoms and price to go above the second top to have an uptrend. This is what I said. Now you have an uptrend. Now, if this happens, you are allowed to sell here because you have an uptrend already. Clear?
So yes, sir. But so if there is no uptrend, that is where I'm coming in now.
Here.
If there is no uptrend.
Yes.
And then we hit this stop loss.
Yes.
So we expected to wait to see another swing, another loose high of the sell to still continue the sell. Yes,
here
something like that.
Here you buy.
Okay.
Okay. You need a trend.
Okay.
You need a trend.
Okay.
And then
thank you.
The failure swing to reverse the trend so you can buy or sell.
It's clear.
Clear? Very good. Any other question, guys?
I've sent something on your WhatsApp.
What is that?
The same picture on the same on what we are talking about here, because I wanted to know how to make the condition of this sell. Should I, after wait for another failure?
Oh, you sent me here on the WhatsApp?
Yes.
No, you cannot sell like that. You need one more swing. This is what I explained here. This is what I explained here, Henry. You want to sell here.
Yes.
But there's no downtrend. That you need an uptrend. You need an uptrend and then a reversal. What you are doing, you are getting in the direction of the downtrend. And to do that, actually, you have to sell here. But we do not do that. It's too late. Too late. I mentioned that in the beginning. We don't enter there. It's too late. Too late.
Okay.
Too late.
Okay.
Yes?
Sir, I would like to ask.
Yes?
Sir, I would like to ask. Yeah, so when we are trading on the trend, uptrend or downtrend, when to get exited exactly? The exit is very important, right?
Yes, very important.
So when to exit? Sometimes I got a 200 pips or 300 pips. I'm being happy, but I put my break even or trailing stop learn 50 pips or 60 pips, and when the reversal comes and hit my break even, so I
understand. I will show you in a while. I will show you in a while. It's part of our strategy. I will show you in a while.
Okay, sir.
We have a question. What is a reversal and what is the difference with change of character? Guys, I studied technical analysis for years. I hold the highest certification in technical analysis. There is no such a thing as change of character in technical analysis. Is it clear?
Yes.
Period. Because somebody came up with a story, it doesn't mean that it's correct out there. And let me tell you, this so-called theory is based on what I'm teaching you. And if you look carefully, we're talking about the failure swing and the non-failure swing. They changed some names to portray them as a new theory. Do not fall in the traps. Is it clear? Follow what I'm telling you. Very simple strategy based on complicated theories that I'm giving you, but I do it so simplified so you'll be able to understand it, master it, and trade it. Because you have to be able to trade it. If you cannot follow it, we said that you're going to lose money. It's your discipline, right? We go on?
Yes.
Very good. Beautiful uptrend and then a reversal. We're going to sell here, guys. After an uptrend, there is a reversal, a failure swing, and then we sell. What do you place here? A stop loss. Why? Just in case. You don't know what is going to happen next. what might happen next. This might happen next. So we make sure that we are going to lose only this amount here, the difference between this top and this bottom. So we protect our capital. Take profit, guys, is so pleasant. We dream of this sports car that we're going to buy, the 4x4 that you like in Africa, right? I know, 4x4, a black 4x4. I even know the brand that you like. You told me so many times, right? You dream of that dream vacation, the house on the lake and stuff like that. So take profit is a very pleasant topic to discuss, and let's put it together in our system. So we have a beautiful downtrend, failure swing, reversal, and we buy here, we place our stop loss at the last bottom. Why? Just in case you never know what is going to happen. You never know what's going to happen next, and nobody knows. And this is the absolute truth. If anybody tells you buy and you will see, price will go up, the minute you hear this sentence, run away, guys. Run away. There's no such a thing. You will see. Nobody knows what is happening next in the market. Nobody. That's why we play stop loss. And the market goes in our direction. We are so happy. We are smiling. We dream of what we are going to buy until something happens and the market changes direction. So when we see a reversal in the opposite direction, then what are you going to do? Let me hear you. What are you going to do here? What? We're going to take profit, all profit. I buy here and I see a reversal. I take my...
If you ask me, I will wait.
I will exit the market.
You take all your profit here. Why? Because this is a reversal of the uptrend. There is no excuse to be in that buy trade anymore. Are you following me what I'm saying, guys?
Yeah. Yes. Sir, I would like to say something here.
Yes. Go ahead.
Can I?
Yes, Vijay, go ahead.
Yeah, listen me. This is the uptrend. You have drawn an uptrend here. So yes. I will open 2 or 3 trades, dividing into three parts. One will be short, say around 25 pips or 30 pips. Then otherwise I will move that second and third trade upwards, and I will target particular some pips, and I will exit my all 3 trades. That will be beneficial. Is it right or wrong?
It's somewhat right, and I will show you in a while. You are on the right track. I will show you in a while.
Okay. Sir, I have a question, sir.
Yes.
Okay, sir, my question is that how many candle confirmed break of structure that will give you a confirmed break of structure?
No. Break of structure. We're not talking about break of structure. There's no such a thing as break of structure. Are you talking about the reversal, the failure swing?
Yes, I like how many candles that will give you that the market?
No. It's just few points. When the price moves a little bit below this bottom, you close or you sell. Yes.
So around here you told us we should buy, and why do you tell us to buy the market before that is supposed to return to point of interest? Or
I don't understand. Say that again slowly. I don't understand. And come closer to the microphone, please.
Okay, sir. Around where you put buy.
Yes, here.
Yes. You told us to buy it.
Yeah.
But I asked, as the way that I'm trading, I used to wait for a point of interest at the market to return to it.
Why? So who said that? Who said that?
So it's like other blocks.
Who said that? Wait, just a second. Are you talking about this? The market comes here, right?
Yes.
Here.
Yes.
And then it comes down. You are going to buy here?
Down below.
I bought the house on the lake already. Here. You understand what you're telling me? It went to the sky and you wait for the market to come down to buy?
Yes, sir. Yes, sir.
It's wrong. Don't fall in the trap.
I used to use smart money concept to trade.
Don't talk to me about smart money, please. There's no such a thing. Smart money, it means you buy in the accumulation phase during range. You cannot do that. Only the big banks, the big institutions can do it, not you.
Okay, so.
Okay.
Prof, can I ask a question, sir?
Yes, go ahead.
That entry point, should we wait for price to close above it, or even if price tested that point to enter?
Just a little bit above.
Can we wait for candle close above it?
No.
Candle will just come.
No.
Okay.
No candle close. No candle close.
Okay, we just. Okay.
Do you want to wait for this price? Do you want to wait for this candlestick to close above? This is what you want?
Yes.
You want to buy here? I am out.
No.
Okay. This is a close above here. You want to buy here? No. Exactly. Okay. So you buy here where I show you.
What if the price touch that place and reverse?
You will hit your stop loss. That's why you place a stop loss.
Okay.
And because you buy here, it doesn't mean that the market will go up.
Okay.
Yes.
Thank you, sir. Thank you, sir.
Yes, you're welcome.
Sir.
Yes, sir.
Must we wait or to see the confirmation or not?
What is the confirmation? What kind of confirmation you want?
I'm thinking about the candlestick and the pattern before entering the market.
When the market goes a little bit above this top, you buy. What kind of confirmation you are talking about?
I'm talking about if the market hit the OB.
No, I never talked about OB. I never talked about market structure or all this. I talk about only the things of technical analysis, please. Do not use any false information here. Tell me about the failure swing here after this top. You want to buy here after the price moves some points above the top. Nothing else. No close of the candlestick. You don't wait. Is it clear?
Okay, sir. Thanks, sir.
Excellent. You're welcome. Next, we can go on. So you take your profit here, as I was saying, you make a lot of profit, and then you can always start a new trade, a sell trade, because this is an uptrend, and then you have a failure swing, so you are allowed to sell, so expecting the market to go lower and lower. Similarly, here you sell because of the failure swing, you place a stop loss, and then you expect the market to go lower and lower. You are very happy, and then you see a failure swing in the opposite direction, so you take your profit, but you can also buy here because there's a failure swing after a downtrend. But unfortunately, for this thing to happen, to buy or sell in a failure swing and take your profit in another failure swing, you need a very strong trend. And unfortunately, after you sell or after you buy, nobody knows whether what is going to follow that is going to be a strong trend. Nobody knows that. So we are going to modify our profit strategy, and we're going to use Fibonacci for now. When you join the bootcamp, the technical analysis bootcamp, I will give you my own profit levels that are based on my research that was published in the International Federation of Technical Analysis in the United States. So for now, you sell here, and the market gives you profit. Careful, guys. Listen to me. The market tells you, here, take some profit. It's on the table. It's for you. And you say, no, I want more, right? And then the market goes lower and says, hey, take some profit. And you say, no, it's not enough. I want more. Okay? The market is so kind to you, and it gives you more money. Look, it comes down. And take profit. And you say, no, I want more. And then something happens and the market goes up like that. And where is your stop loss? Here. So the market gave you so much profit. You were greedy. The market reversed in a spike and you lost everything. All the profit, and you lost money of your capital as well. Why? The market was so nice to you. So let's change our profit strategy. Look at that. So when the market is so nice, wouldn't it be nice to take some profit out of the trade? So when the market comes here, let's take this profit out and put it in our pocket. How do we find this level? It's called 161.8%. It's a Fibonacci profit level. And then when the market is so nice and gives you more profit, you can take another profit at 261.8%, and eventually you can close everything at 423.6%. These are Fibonacci extensions. You don't have to calculate them. They are done for you automatically. We have a course on Fibonacci that we explain everything. We explain the ratios that you're not supposed to use. Everybody's using Fibonacci the wrong way. We're using the Fibonacci to take profit. Some people use Fibonacci to buy or sell. Completely wrong strategy. You will lose your money. But we explain the theories and we teach you how to use Fibonacci the correct way. And also in the bootcamp, we explain not only how to use Fibonacci, but I will give you a trick that I developed in my strategy that you can maximize your profit and you can minimize your losses. It's like magic. And you don't have to close everything here, by the way. You will learn that in the bootcamp. But for now, as a beginner's course here, you can close everything at 423.6. Again, these numbers are not random numbers. They have to do with complex theory like Elliott wave theory, which is an advanced theory. One day, perhaps, some of you will want to follow that advanced course. So here we have a downtrend, we have a reversal, you buy the market, stop loss, of course. The market is so nice, 161.8, we close some trade, 261, another part of the trade, and 423.6, another part of the trade. So this is the strategy and the profit strategy with the Fibonacci levels. So I will switch, if you don't have any questions, I will switch to the trading platform so I can apply this strategy on a live chart, 11 price charts. Is that okay?
Yes.
Just let me know whether you can see
Yes,
my platform. Do you see my platform, by the way, or no?
Yes, I can see.
Ooh, excellent.
Okay.
Look at that. I'm going to draw, guys. For you to practice, you have to start drawing lines. Look, bottom, top. Do you see it? Top, bottom. Do you see exactly what I did in the presentation? It's here on our chart. Look at that. Do you see it? Are you following me?
Yes.
Yes? Only one person is following me?
Yes, we are
Yes,
with
yes,
you.
yes, yes. Following.
Okay. So, two higher tops, two higher bottoms, and price moves above the second top. What do we have here? Very fast. Mute yourself, guys. What do you see here?
It's uptrend.
Uptrend.
Uptrend. And then top, bottom, bottom, top, right? If the price falls below this bottom, what are you going to do here? You see, the price moved below the bottom. I don't wait for a close. Here, what are you going to do?
Sell.
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 And what are you going to place here? Very fast.
Stop loss.
Stop loss. And where is your profit? From bottom to top, Fibonacci. Let me do it like that. Maybe it's going to help you more. 161, here you take some profit, here you take another profit, and here you take another profit. Is it clear? Profit,
Yes, sir.
profit, profit. Clear. You put all the profit in your pocket. What do you do next? You call your professor and say, hey, Andreas, I used your strategy. I made a lot of profit. Give me your bank account to transfer some money for you, right?
Right.
Nobody. Yeah, right. I don't believe you. Nobody does that. You make so much profit that you forget me. Go to the next. That was Bitcoin, by the way. Bitcoin, that's Bitcoin, yes? On the daily time frame, we go to gold on the 15-minute time frame. Look at that. Top, bottom. Bottom, top. Top, bottom. Bottom, top. So what do you have here? Two lower tops, two lower bottoms, and price breaks below the second bottom. So what do you see? Very fast?
It's downtrend.
Downtrend. And here, bottom, top, and top, bottom. If price goes above the top, what do you do? Here?
Buy.
Buy. And what do you place here?
Stop loss.
Stop loss.
And where is your profit from top to bottom? Fibonacci. 161 profit, 261 profit. You made a lot of profit. It's fine. Okay? And you are still in the market. No stop loss hit. Is it clear? You are still in the trade. S&P 500. Bottom, top. Top, bottom. Bottom, top. Top, bottom. Are you following me, guys?
Yes.
Top, bottom, here.
I have a question.
Just a second. And top, bottom, and bottom, top, right? What is the name of this candlestick, by the way? Do you remember?
Hammer, reverse hammer.
Hammer?
Inverted hammer.
Inverted hammer. You all lost, all of you, wrong. Those of you, that's why you should have attended Thursday's webinar, Japanese candlesticks. This is not a hammer. This is not inverted hammer. This is a shooting star. Here. What do you do here?
You sell.
You sell. And here, what do you place here?
Stop loss.
And how do you take your profit? Bottom, top, right? 161 profit, 261 profit, and then it hits your stop loss. But you took part of the trade out, so what you made as profit compared to the loss, you win. You made more profit than loss, okay? Do you see that if you don't protect yourself, you might lose everything? Look, that big candlestick. You see that? Anything is possible. Dow Jones Industrial Average. Top, bottom, right? Someone had a question, by the way, and I said, wait. Who had a question before?
Yeah, I have a question.
Yes, go ahead.
I said, how can I get the recorded version of this class?
What is that?
The recorded version of this class.
The recording, Suman will explain later about the recording. Yes? So, yes, let me hear you. What is the question?
Please, sir.
Yes,
please, sir. I have a question. I'm wondering, how do I take the profits out of the market? Do I need to, at different, this Fibonacci levels, at the different levels, do I need to automate them altogether, or do I need to open a fresh trades across the Fibonacci levels?
You might enter with 3 trades. You might enter at the same time with 3 trades. And each trade has a different take profit, but same stop loss.
Okay. Okay, thank you, sir.
You're welcome.
Understood.
Yeah. And then from here, you come here. So what do you see here? Very fast, guys. At the speed of light, what do you see? What do you see? Downtrend. Thank you. And how about here? What is going to happen here if price moves above this top here, right here? What are you going to do?
You buy.
And what are you going to place here?
Stop loss.
Profit. Fibonacci 161, 261, and 423.6. You took all the profit out of the market. You might call me, right? Thank you. Dow Jones 30 minutes daily. We're moving to Euro USD 5 minutes. Do you see the uptrend very fast, or I have to draw it for you?
Yes.
In the beginning, you have to draw it in the beginning, guys. Yeah, go ahead. Go ahead.
So what time frame is the best for the analysis? Because I can see you're using 5 minutes daily time frame and 15 minutes.
And 1 hour. And 1 hour.
Is best for us.
No, 1 hour, 4 hour daily, 5 minutes, 1 minute, 1 week, anything that you like is good. That's the beauty of technical analysis. It applies to all time frames.
But they tell us that if you want to do analysis, then you should start from the higher time frame to get the bigger picture of the.
I never said that. I never said that. I never said that. I never said that.
I say I did not say you say. I say they say by
no. Like, the answer is no. One time frame, one price chart. Analyze it and trade it.
Okay, so you are saying that if we want to we should focus on any time frame we want.
Exactly. From bottom to top. 161. Did you take profit here? You see? And you wait for the market to go to your next profit level or to hit your stop loss. As simple as that, right? We move on. Australian dollar. Bottom, top. Top, bottom. Bottom, top. Let's go here. And from here, we can move here. Do you have an uptrend already or no?
Yes, we do have an uptrend.
Exactly. And do you see the top that failed to go higher?
Yes, failure to
swing. What are you going to do here?
You sell.
And here?
Stop loss.
And how do you take your profit? 161, 261, and you wait for the third take profit level to be reached. Is it?
I have a question. Sir, I have a question.
Go ahead.
Yeah. I would like to, you have drawn a Fibonacci here. I'm seeing here 161, 261, and 423. Whereas on my chart, I draw a Fibonacci on my chart, but I see only maximum 100 point. What about that? What is the wrong?
I don't know. But the Fibonacci, the extensions are 161.8, 261.8, and 423.6 by default. You don't have to put anything. It's by default.
So I have only maximum 100.
It's impossible.
Yeah, I will show you, sir.
Yeah. Okay. And then we go to Ethereum. Guys, by the way, when I started out, it wasn't the easiest thing to draw tops and bottoms, you know? So I developed an indicator that does exactly this analysis for me. Look at that. Ethereum US dollar on the 4-hour time frame. So look, let me just remove it. It's called FX Swing Wizard, and I will put it on my chart. Look, I drag it, boom, okay, and it draws exactly the tops, the bottoms. So you see here, we have an uptrend, we have a failure swing. It says enter here, take profit 1, profit 2, profit 3, and here is the profit 4. By the way, these are not Fibonacci. These are my profit levels are different than Fibonacci. They give you better results. Anyway, so we go to the next one, GBP USD on the 1-hour time frame. It draws the tops and the bottoms, and it is ready to buy. Do you see that? A failure swing. If it goes above this top here, it's about to buy. and 4 take profit levels. Not 3 like Fibonacci. I have 4 here. This is Doge US dollar, a beautiful downtrend, and then a failure swing in the making. If it goes above this top, then I buy here 4 take profit levels. New Zealand, Japanese yen, a beautiful downtrend. If it goes above this top, then I'm going to buy target 1, target 2, target 3, target 4, and GBP, JPY, another beautiful downtrend, and then I will buy here if the market moves above that top. So let me see where I am. Okay, so guys, this is what I had for you today. If you don't have any questions, then do you have any questions?
Yes, sir. Hello, good day, sir. My name is Victor, sir.
Yes, Victor.
Okay. My question is just simple. You mentioned about half trend. I actually know of an indicator that is called half trend. What was your advice as regards to that particular indicator to
Half
use in
trend?
identify?
What is that? What is the name of this indicator?
Half trend.
I don't know.
Half
I don't know.
trend.
I don't know such an indicator. I
Okay.
never heard of this indicator. How do you spell it?
Just have HALF then trend.
There's no such a thing. No such indicator. I never heard of that.
Okay, you can search for the indicator on TradingView. It's also on TradingView as well. And you also
I wrote
the
the tutorial for TradingView. I wrote the whole tutorial for everything on TradingView. Half trend? I don't understand.
Okay.
What does it do?
It just the kind of like in line with what you are saying. Once at the point of a reversal or at the point of the trend, just kind of indicates the trend until there's a reversal. It seems to just that sometimes it kind of repents in terms of changing, but once the trend changes, it seems to change as well.
On what terms? On what terms it identifies the trend? This is a question.
Okay.
I mean, I'm teaching you here hardcore technical analysis. This is the definition of Charles Dow's theory that I'm giving you. The father of technical analysis is Charles Dow. I am using his definition of the trend. I cannot rely on any other definition for a trend. You understand what I'm saying?
Yeah, yes, sir.
Why should I rely on somebody else who doesn't know what he's talking about to identify the trend? Why don't I follow the correct way to identify the trend? Tops and bottoms, period. This is not what Andreas is saying. This is what Charles Dow is saying. Don't listen to me. Listen to Charles Dow. Why do you want to follow an indicator in TradingView that nobody knows? Yes? Any other question?
Yes, sir. I have a question, sir.
Yes, sir.
If for me, as someone that is yet new in the drawing the lines on the candlesticks chart, is it advisable then, because the lines actually look close to there's an already made or customized kind of a chart they call the line chart? Is it easier to use a line chart on this?
No, it's not advisable to use the line chart. We have a course on how on the chart types is the worst chart type, the line chart. It doesn't show you the high and the low.
Oh, that's correct.
And the tops and the bottoms rely on high and low of each candlestick.
Understood, sir.
Yes, very good.
Thank you, sir.
You're welcome. Any other question, guys? Okay, so Suman will take over in a while. We'll tell you about what we are doing and what you can learn more. Every Saturday we meet about more or less, and sometimes we have extra courses during the day, and we also have paid courses. Very soon you will see in the WhatsApp group, in the Telegram groups, a link about the certificate. You can grab your certificate for attending this webinar. It's not just any webinar. I'm sure you will agree with me that you learned something very valuable today, and you can show off the world your certificate, and it might open very many doors for you, especially in this business. Many of my students have key positions in this industry, from salespeople to BDMs to CEOs, many of them, especially in Africa, that you are residing there. Nevertheless, we have courses that for absolute beginners, we start from zero and we go step by step. We have the technical and the ultimate trading formula workshop, this strategy, but it's a hands-on workshop that you will draw, you will do the talking, you will show me where to buy, where to sell, you will practice with me and I will correct you. It's like holding your hand and teaching you how to trade on your own, how to apply the Fibonacci, how to change the Fibonacci levels, how to, many details, okay? That's the ultimate trading formula workshop, and it's advisable for those who want to perfect their strategy. You got an idea here, but now what remains is to be able to use it and make some money. And then we have the technical analysis bootcamp, of course, which is 11 hours of live trading, live training with me, yes, and 191 minutes of video tutorials. And also you get access to the risk management book that I wrote. And of course, last but not least, you get subscription for 12 months to the FX Swing Wizard. FX Swing Wizard, this is the indicator that I wrote, and you will be able to have it for a whole year so you can benefit from it. So if anybody of you is interested in anything that we are teaching, and we are teaching a lot, just send us a message or write here in the chat, and we will try to contact you so we can have a small discussion how to help you further to stop losing at least and then start making profit. Okay, guys, if you don't have any questions, then I will pass the microphone to Suman.
Thank you, Mr. Andres. And as you explained, I've already pasted the link on the
Very
chat.
good.
Right, I'm just going to go over a few things. Like every Saturday, we're going to have this free webinar, right? And of course, you all can join, ask your questions, learn every Saturday with us, right? And now moving forward, I know today was a very productive webinar because you guys had a lot of questions and cleared a lot of doubts and learned some important things. And I think one of the highlight for this today's webinar is demystifying, the belief that you people have. Sometimes the pattern must be, so frequent in your trading journey that you start believing, okay, this is the way. But actually, that might not be the way. In order for you to understand more and understand the real technical analysis, I would always suggest you to take technical analysis bootcamp with Mr. Andreas so that you can learn, every detail, learn, demystify all those beliefs and then start using it right away. So it's a 12 hours long program wherein which you will get hand holding, you will also get risk management ebook, you will also get, FX swing, indicator for a year subscription and so much more value. So, however, I'm going to share that link as well here. And we have a couple of things. Some of you were asking for candlestick webinar, right? That happened last Thursday. So I have pasted that link, Introduction to Japanese Candlestick. It's a webinar that happened on Thursday. And if you want certificate, you can get it for $15. And now moving to Ultimate Trading Formula, it's a one-to-one session with Mr. Andreas. It's, priced at $150. And if you're interested, you can use the link to subscribe for that as well. And now moving forward to the technical analysis bootcamp. I'm just going to share my screen and walk you guys through the website. Let me know if you all can see my screen.
Not yet.
Okay, 1 second. Okay, so now, can you see my screen?
Yes.
Yes,
Perfect.
yes.
Okay, so you can just go to andreastelesinos.com and then, click under courses, right? And you will be able to see the Japanese, candlestick webinar that you can purchase a certificate and also watch the complete webinar. And you can also get today's webinar. If you want the certificate for today's webinar,
Okay.
in 30 minutes, the video will be uploaded, but yes, you can make a purchase here and the video will be available here. All right. And now moving forward to technical analysis bootcamp information. So technical analysis bootcamp, you can just go under services and then, click on technical analysis. You will be able to, 1 second, you will be able to see the page. However, you all can directly message Mr. Andreas to know more about the certification. So let me know if you all can hear the video.
Are you tired of spending hours watching endless?
Can you hear? Can you all hear the video?
Yes, yes, we can.
Okay.
YouTube videos, jumping from strategy to strategy only to feel even more confused than before? One person says buy, another says sell. One indicator works today and fails tomorrow. After all that time, you still don't have a clear system. If that sounds familiar, this message is for you, because the truth is, most people do not fail because they lack motivation. They fail because they never learn technical analysis in a structured way. Today, information is everywhere. Thousands of videos, thousands of opinions, thousands of indicators.
Sorry, you all can hear it?
Yes, we can hear it now.
Okay.
But information alone does not create understanding. And when you try to learn everything at once, you become overwhelmed. You hesitate, you second guess yourself, you enter too early, exit too late, risk too much, or avoid taking action completely. That's exactly why we created the Technical Analysis Bootcamp, a live structured learning experience designed to help you fast track your learning and implementation. Hi, my name is Andreas Selesinos, a veteran educator with over 30 years of experience in technical analysis. I hold multiple qualifications including BSc, MSc, MSTA, CFTE, and the prestigious Technical Analysis Certificate, MFTA. Over the years, I have trained thousands of traders, investors, and professionals across the world, and happy to bring to you the Technical Analysis Bootcamp. During the bootcamp, you will learn how to understand market structure clearly, how to identify trends and potential reversals, how to approach charts with confidence instead of confusion, how to build a structured mechanical approach, and most importantly, how to manage risk properly. Because before investing in the markets, you first invest in yourself. The bootcamp is designed for beginners who want a proper foundation, people overwhelmed by too much online information, and traders who are tired of guessing and finally want clarity. This is not a random online course filled with theory you will never use. This is live learning, real explanations, real chart breakdowns, real structure. You won't just learn what to do. You will understand why the market behaves the way it does. And that changes everything, because once you understand structure, you stop chasing information and start building confidence. Seats for the technical analysis bootcamp will be limited. If you're serious about learning technical analysis the right way, join the waitlist today. Be the first to know when registration opens. Get early access updates and take the first step toward learning with structure, clarity, and guidance from one of the industry's most respected educators. Click the button below and join the waitlist now.
So, how many of you are ready to join the waitlist?
I want to join.
Right. So, thank you so much for that. So here is the complete details. You're going to get, see, when you actually watch a recorded video, you would not have any hand holding. You're going to have your own set of challenges. So in order to overcome that, this is where Mr. Andreas will be taking live classes 12 hours straight, which would be, of course, broken down into very consumable chunks. And then you can learn, you can ask questions, you can also get hand holding from him. Example, you will also have practice sessions where whatever you learn, you will practice, and then you can show your charts and so on and so forth, and then start learning. And you will also get risk management guide and strategies, and you will also get 1 year full subscription for the FX Swing Wizard indicator and also certificate. So this is what it all includes. And if you're interested, I would highly recommend you all to leave a message or directly. Okay, you can go to this link and you can click on the button that will take you to the page, or you can also message Mr. Andreas directly on the WhatsApp to book your seat. Okay, so that's about technical analysis bootcamp. I see a question here. Suman, what will be the use of this certificate? Okay. What will be the use of the certificate? Of course, it is a confirmation that you have learned, and then you can use it in your industry wherever wherever that fits you. And Mr. Andreas, would you like to?
Yes. A lot of people in this industry got a job because they showed one of my certificates. Imagine going to a forex broker and saying, I want to become an employee of yours. They will ask you, what do you know about our industry? And you will say, blah, 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 blah. And then they say, do you have any proof? And you will show one or all of your certificates, right? So a lot of your countrymen where you live have a job in the forex industry because of my certificates, right? And not only in your country, in many other countries. It's a proof of your knowledge. Everybody can claim that they know something, but that's why the colleges and the universities give you a certificate, right? It's a proof of your knowledge. And of course, the more hours, the duration of the course, the more valuable it becomes. Of course, the bootcamp is one of the most prestigious courses that my students in the past, today, and in the future will follow. And that gives you invaluable knowledge that can open doors for you in this industry, right? And that's the reason that we offer the certificate for you. You can start with a small certificate, and then as you grow with knowledge, then we can give you another certificate. By the way, in the bootcamp, the certificate is free. Thank you.
Thank you, Mr. Andreas. And I'm very sure that so many brokerages out there. There are so many opportunities out there. Maybe you may not trade for your own self, but if you choose to invest in learning, I'm sure you will start seeing the opportunities tenfolds, and you can work in a company using the certificate, and you will have a better knowledge and better leverage over your career as a trader. So that's amazing. Anybody have any questions so far? Any questions?
When is the training going to start on bootcamp?
So for the bootcamp, I would like you to actually speak to Mr. Andreas first, and then we will set the date. 1 second, let me send you the link to message Mr. Andreas.
Okay.
Okay, this is the one. Right. I'm pasting it in the chat box. This will take you directly to Mr. Andreas' WhatsApp. You can talk to
Okay.
him, fix a meeting, and then, discuss about the bootcamp. Amazing.
Thank you. Cool.
Thank you, Shirley. Anyone, any other question? Did you all have fun today and learn a lot? Yes? Give me yes.
It was awesome.
Thank you so much, Victor. Thank you, Shirley. Thank you, Ibrahim. And if you guys don't have any other further questions, then we'll paste all the links in the group. And I would request all of you to leave a review in the group, or maybe share this word on social media, right? Just take photos of yourself or the screen. Go ahead and share in the social media. Tag us so that we can also tag you on our stories. So that will be a great way to even stay connected on the social media. So thank you so much for all of your time. Thank you, Mr. Andreas, for valuable lessons that you've been teaching every Saturday. And we look forward to seeing you on the next Saturday and many more live trainings that is yet to come. Have a great evening, guys. Take care. Bye.
Thank you. Bye.